Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hello. Good morning, everyone. This is Kathy. I want to say hello, make sure everyone can hear me, see me, and everything is looking good. Let me see if I can just show myself on screen without the banner. You know, Boris always has these fun things that I don't always know how to get off screen. So give me 1 second. There we go. Great. Hello, everyone. Good morning. If you can hear me, see me, say hello. Hello, Eugene, Steve, Peter, Thompson, Olayimi, another mutant. Good morning, Andrew. Thank you so much for ordering one of my books. Which one did you get, May? Was it Day Trading the Currency Market, which I've got behind me, or the brand new book, Prop Trading Secrets? Which book did you pick up? Good morning, Joe. Good morning, Bob, Andy, wonderful. And hello, Afrian from Mexico. If you are brand new, let me know that you're new to our Monday live stream. So we can give you a very, very special shout out. I know that Monday is the most important stream that we do. It's obviously the most important day of the week, and it allows us to sit down, prepare for the brand new trading week. And I think that's extraordinarily important because if you joined me for non-farm payrolls trading on Friday, I think many of you did, we had a very, very nice crowd. The key to our success is preparation. And that is what makes Monday so important, because we prepare for what is to come this trading week. Yes, Prop Trading Secrets is my brand new trading book. It's for those of you that love to prop trade. There's so much commonalities that I found in the traders that I interviewed that learning those simple tips, I think, will really speed up your path to success. So let's go ahead and start with talking about the brand new trading week. I think that the sound is loud and clear. Peter says my sound is coming and going. If it's good for you, give me a thumbs up. If it's also coming and going, give me a thumbs down. Let me know if Peter is the only one experiencing this or everyone else, the sound is good. So give me a thumbs up for sound is smooth. Okay, Steve is telling me all good here. Wonderful. Seems like it may be something on your end, Peter, because Tom also says that the sound is good. All right. So it's a brand new trading week, as I said. And the primary driver of this trading week is really what happened last week. You know, there were two big events last week. Number one was that the August 1st tariffs started. So the August 1st tariffs started, and everyone thought that the beginning of the August 1st tariffs was going to start to send a wave of concern for the markets. And I'm going to share with you my screen. Give me 1 second. I'm going to do that. And this is just a chart of the S&P. And in some ways it had, right? Because where's my arrow? In the beginning of the week, stocks kind of traded heavy, traded heavy on the fear that we would have, first off, potentially weak jobs report, and then that the tariffs would be enacted, as President Trump has said, and that would be disastrous for global growth. And so stocks did pull back, but now we're seeing a little bit of stabilization. Stock futures, especially, are up about 0.5%. The NASDAQ is up almost 1%. So what is going on today? And I'm still saying that this is a carryover from Friday. And the reason for that is because the biggest announcement that we had last week was the non-farm payrolls report. And I'm going to share with you the data on non-farm payrolls. Actually, we can probably just pop it up here and show you, where is this? You guys are getting, some of you are so smart and you're getting so ahead of yourselves, which is great. But I just want to show you how significant this is. Where's Friday? And we traded this and we did very, very well trading this. But we had non-farm payrolls come in at 73,000, which was much. This is the worst number that we've had since November of last year. This is the worst number that we've had in Trump's term. But it wasn't just that. I mean, look here. The prior number was revised so terribly. I don't know if you can see this. I'm going to try to zoom in. But this was the original reading, the orange line. And then the actual number was the bottom right here. So the actual number was revised down to 14,000. And so the revision, yes, another mutant. The revision is the bad stuff. It wasn't just the headline number. It was the revision that was terrible. We made a lot of money selling dollars on Friday, but now it's a new trading week. And so, it's important to talk about what is expected ahead. So the number was ugly, and this has significant ramifications. And this is significant ramifications for how we're going to trade throughout the course of the week. Now, the most important implication of the jobs report is what it means for the Fed, what it means for what the Fed will do in September. Another being, you're the MVP of today because you're making all the right comments. The reason why the jobs report is so important is because it has, first of all, it definitely affects how the Federal Reserve thinks and what they do, but it has caused a dramatic shift in central bank expectations. Now, if you joined me on Friday, we talked about how going into the NFP report, the market was pricing in a 63% chance of an interest rate cut. I want you to look at this area that I highlighted here. 63% chance of an interest rate cut. Current rates is at 4.25% to 4.5%. And so on Friday, before we got the jobs report, the market was pricing in 63% chance that the Federal Reserve was going to cut interest rates. I mean, actually 65 if you add in the 2%. Now they're pricing in an 87% chance of a interest rate cut in September. Now, if we look at December, once again, the current rate is 4.25% and 4.5%. So that's what we're looking at. So 4.25% and 4.5%. So this is the current rate. So before the non-farm payrolls report, the market was pricing in pretty much a 93.5, which is 100 minus 6.5, 93.5% chance that we'd get one interest rate cut in 2025 from the Fed, and a 63% chance that we would go 64% chance that we get two interest rate cuts. So where are we now? Now the market is pricing in basically a 93% chance of one interest rate cut, and that it is pricing in it's pricing in basically a 93% chance of two interest rate cuts. So the point that I want to make is, if you read some of the headlines, if you traded with non-farm payrolls with me on Friday, I talked about how the headline that we caught for the market's pretty much priced in two interest rate cuts for this year, which is a big shift from the maybe 1.5 interest rate cut that the market was predicting before the non-farm payrolls report. Now, this is very, very important for a number of reasons. And the main reason is, and I'm going to give you all a pop quiz. How many interest rate cuts do you think the Federal Reserve cut? How many interest rate cuts do you think the Federal Reserve did this year? So wild guess. I want you to type into the chat how many interest rate cuts you think or that the Federal Reserve delivered this year. Thank you so much, USA. Goriala, we will talk about inflation in a minute. Yusuf says 0. Ben says 2. Glad says 0. Thomason says none. Alonso says none. Dan says none. Ray says 3. DC says none. And those of you that gave me the big fat 0, you're absolutely right. It feels like the Fed cut interest rates or should have cut interest rates. I mean, the markets have short memory. Sometimes we do too, because the last 7 months have been a blur, and it's been like a lifetime of things have happened in the last 7 months. But in reality, the one thing that has not happened is that we've had 0 interest rate cuts from the Federal Reserve this year. So this is what I'm getting at. The Federal Reserve is expected to deliver their very first interest rate cut in September that should kick off a series of interest rate cuts. Probably 2, and there's a greater chance that we'll get 3 than 0. So probably 2 this year, paving the way for more in 2026. Whereas you have other central banks like the ECB, the Bank of Canada, that are basically at the end of their interest rate cut cycles. So they've cut interest rates, quite a bit this year, and they're almost done. So if we take our step back, the number one driver of how currencies move is where interest rates are headed. Not how much a central bank has done already, but how much more they're going to do in the future. So if you imagine one is just getting started with a few interest rate cuts, and you've got others who've done a whole bunch of interest rate cuts already and are almost winding down, and perhaps their currencies had moved earlier, well, maybe not so much, but had moved already based upon it. If one central bank is just getting started with rate cuts and the rest are almost done, and that central bank that's just getting started is the Federal Reserve, what do you think this means for the dollar? What do you think, if the Federal Reserve is just getting started on cutting interest rates, what do you think it means for the dollar? I love interactive sessions because it shows me that you're really paying attention. It shows me that you are really getting what I'm trying to share with you. Koba says dollar bearish. Fred says dollar free fall. Thomason says dollar pressure. Goriello says dollar lower. Glad to hear. You guys are so smart. I am so proud of you that you are understanding what I'm trying to get at, which is that the Federal Reserve is just getting started. Everyone else is winding down. So as a result, there is a very, very good chance that this week and probably longer is going to be about the fallout from the jobs report and the push for the Federal Reserve to start cutting interest rates. So my outlook for the dollar this week is bearish because, there's not much in the way of U.S. data. The only major piece of U.S. data that we have in the calendar is the ISM services report on Tuesday, and that's it. So really, it's going to be about, how likely is the Federal Reserve going to cut interest rates? And the reason why, getting back to stocks, the reason why stock futures, the NASDAQ is up almost 1%, Dow futures and S&P futures are up 0.5%, is because interest rate cuts is good for stocks. Interest rate cuts reduce the borrowing costs and is good for stocks. Now, the reason why I say this week, I feel very strongly that we're going to be going to be dollar bearish, but as we get into the rest of August into September, we'll have to see because there's a lot of things that can throw that off. As one of our friends here said, what about inflation? I forgot who it was. Is inflation no longer important? Inflation is important. And so, right now we just had the jobs report. And let me see, when is the next consumer inflation report date? The next consumer inflation report date is going to be August 12th. So we've got, it won't be until next week that we have the U.S. inflation report. So we'll have to see how the U.S. inflation report fares. But this week we only have ISM services, and it's less important because we already had the jobs report. So we've got the inflation report coming out on August 12th. We have the August inflation report coming out as well before the next Fed meeting. So we've got 2 inflation reports and 1 more jobs report coming out before the next Fed meeting. So, yes, one of you points out that the dollar is very resilient. The dollar is resilient because, data hasn't been that terrible up until now. Up until now, we had that very weak jobs report. But we still have 3 other pieces of very important data, which is next week's inflation report. We have another jobs report. Then we have another inflation report before we get to the September 17 FOMC announcement. And then we have another wrinkle here, which is, of course, the President Trump fired the person that's in charge of the labor market, data. The person's in charge of the labor market statistics. So, as who pointed it out? I don't know who pointed out, but said, watch for the revisions. Wait till this revision, John says. Yeah, let's wait till this revision. Let's see, whether or not the new head of the labor market statistics pushes them to change the numbers even further. So, I think, first of all, with the firing of the labor market statistics head, U.S. data has now come into question. And, people will start to wonder how, accurate is the U.S. data. Maybe they'll start looking at it like the Chinese data. We can have a whole separate conversation about this. But, we've got to watch the numbers, because if the numbers are weak, they'll definitely drive the dollar down. If the books are cooked more and we got a lot of revisions, then, the dollar will remain resilient. There's so much we can say about that. But what we do know right now is that for the next week, we're just talking about our game plan for this week. Every Monday we sit down together, we lay out our game plan. This week, those numbers will not be revised. I mean, if anything, the numbers will be revised the following week and the following month. And this week we don't have the inflation report. So the only thing we have going on is the fallout from the jobs report and any trade headlines or tariff headlines. August 1st reciprocal tariffs were hit and began on Friday. So that's also something that we're going to have a fallout for this week. And we're still waiting on the Canadian tariff numbers to see if, we get any sort of negotiations coming out. So, all of that is going to be important. And I think, the market's going to be watching for that. We're going to be watching for that. But, that's assuming, we get no damaging headlines. I think the dollar is going to fall this week. So I think the dollar is going to fall this week. I'm bearish dollars. We have the ISM services coming out on Tuesday, and we did have weaker manufacturing ISM and a weaker non-farm payrolls report. So chances are it's going to be weak. So some questions here. Inflation numbers are appreciated by Trump's bunch. Next week is inflation. We'll talk about inflation next week. We're talking about how to trade this week. How is it possible for such large downward revisions of the previous month's NFPs? Very good question. So the way the non-farm payrolls numbers and any numbers are calculated is that usually what happens is that they have data for the first 2 weeks of the month. And then based upon that number, they extrapolate for the next 2 weeks of the month. So if the first 2 weeks of the month are weak, they're going to say, okay, this means that it's carried over to the last 2 weeks of the month. And so when they give you the first number that was released on Friday, it's based upon the first 2 weeks of the month. And then, of course, the rest of the month's data comes out, and then they get the real number, and that's where the revisions are. By the way, for those of you that want to learn, more about how to do fundamentals, how to read fundamentals, how to learn fundamentals, make sure that you are, join my free community, which, here's the QR code for the free community. But I want to show you one more thing that we showed on, where is it? Boris has all his little codes. We had a course there it is, Trading 360. Trading 360 includes my fundamentals course. It's an amazing package that we put together. So definitely, click on that QR code and you get information on my Forex fundamentals course. Okay, so what other questions? Isn't tariff news going to benefit the dollar? This is a really good question, G. We talk about this all the time in our Monday streams, because while theoretically you would think that first of all, it depends on what tariff news. Is it a positive tariff headline or a negative tariff headline? Is it a headline that means that the tariffs are more than expected or less than expected? Because the news could be good or bad, right? If the news, if Canada, for example, suddenly gets hit with 50% tariffs, then that, you would think, okay, that's really negative for the Canadian dollar, which it will be, and that it should be positive for the US dollar. And it will be positive for dollar CAD, but the dollar actually may end up falling against the Japanese yen, for example, against the Swiss franc, because the market starts to worry, oh, wow, that was a really bad number. Is he going to start to set really bad numbers again for other countries? Now, a lot of the other country levels have already been set, but it doesn't preclude Trump going back. We've seen this back and forth numerous times. So it's not necessarily dollar positive. It does not mean that's good for the U.S. economy. So, that's definitely something that you can't automatically assume. All right. So this is so that's my view for the dollar. I'm bearish dollars this week. For euro, I'm bullish euros. The ECB is at the end of its easing cycle. They probably have one more interest rate cut coming up. We have very little Eurozone data this week. We only have the retail sales report and the trade balance, both of which are expected to be good because we did have stronger German PMIs, stronger IFO. This is an important week for the UK. We have a Bank of England rate decision. Now, whenever we have central bank rate decisions, I invite all of you to put yourselves into the shoes of the central bank. So put yourselves into the shoes of the central bank and think about, what could it mean for the central bank? What does all of this mean? What does all of this mean for the central bank? Where is my screen? Here. All right, I want to remove this banner. Hold on, let's remove the banner. Okay, let's see. Boris has all these weird cards, and so I have trouble. I'm just gonna go with some random card here. Let's see. All right, good. All right, make sure you like and subscribe our channel. All right, I can't get rid of his ads. But anyway, I always invite you to put yourselves into the shoes of the central bank. And so the Bank of England has a rate decision this week. And based upon this, we always put together a table that looks at how the economy changed from one meeting to the next. How did the economy change? What is going on with, there we go. What is going on with the UK economy? Do you see more green or do you see more red? Yeah, please like, subscribe, get us to 100,000. We're almost there. I'd really appreciate it if you helped me do that. I want my silver YouTube button, and I will, display it proudly. So please like and subscribe. I want to we're so close. We're like 100 people shy of 100,000. So, please do that. So yes, it does look like there's more green than red, which is actually kind of interesting because the Bank of England is widely expected. The market is pricing in a 100% chance of a interest rate cut from the Bank of England this month. So in light of that, let's, kind of ask the question. So if we do see that the Bank of England is expected to cut interest rates, if we see that, most of the data is stronger, what does that suggest to us? Suggest that maybe, they will cut interest rates, but maybe they're almost done. Maybe the guidance that we have from the Bank of England won't be that bearish. I mean, yes, retail sales were kind of weak. We can look through the table. Retail sales were kind of weak, but consumer confidence is negative, but up a little bit. The unemployment rate, this is actually wrong. I should say bearish. The unemployment rate, so actually, you know what? I did this all wrong. So, because I did this quickly last night. Let me do this again for you. And let me show you the correct table. Hold on. I'm going to pop this over to myself. Give me a second. Okay, 1 second. I'm going to give you the updated one because it was my mistake. All right, save image. Okay, all right, we're going to do the latest one. Hold on. All right, okay, here we are. Hopefully open in just a second. There we go. I just updated it. So I apologize. There is just as much red as there is green. Retail sales was weak. Consumer confidence was a little better, still weak. Labor market numbers were pretty weak. Unemployment rate increased. Claimant count, which is the number of people filing for unemployment benefits, also increased. And the average hourly earnings was weak as well. Inflation is up a little bit. Inflation is a big problem. It actually increased and it's going well above 3%. You know, every central bank wants it around 2%, but it's gotten well above 3%. So it's very, very problematic. Mortgage data, housing data is kind of mixed. Activity is mixed. It's neutral. And the stock market is up. The UK bonds are neutral. So, you know, definitely the Bank of England is expected to cut interest rates. But based upon this, you know, their guidance is probably going to be neutral, or only marginally dovish, because you know, there are certainly pockets of weakness they should be worried about, but beyond the pocket of weakness that they should be worried about, you know, inflation is a really big problem. So, you know, they are probably nearing the end of their cycle. They're probably almost done with changing interest rates. They're probably almost done with changing interest rates. And that is very, very important to remember. So how do we trade the pound? Let's look at our chart. Taking a look at the chart, pound dollar has already fallen quite a bit. And you can see it's rebounding a little bit. The Bank of England rate decision is not until Thursday. It's not until Thursday. So, you know, chances are the market expects the Bank of England to cut interest rates. So we may have a little bit of rally, but I'd be a seller on rallies. And then based upon what the Bank of England says, because we know that they're going to cut interest rates by 25 basis points, pound will either be a buy or sell. Now, I did mention that I think the US dollar is going to fall. So as a result, I think the better opportunity is probably going to be, for example, long euro pound, or maybe short pound Swiss, because, you know, the dollar itself could kind of impact how pound dollar trades front of the week, whereas euro pound, it's going to be much more based upon pure pound flows. Regardless, I'm bearish pounds, looking for you know, the pound to basically fall most of this week. I'm also bearish Aussies. We had pretty weak Aussie data last week. RBA has cut interest rates, says more is to come. So next to the Federal Reserve, I would have to say that the Bank of England and the Reserve Bank of Australia is probably the most dovish. I'm neutral Canadian dollars because this is a huge week for the Canadian dollar. We have Canadian IVPMI, we have the jobs report, we have the trade balance, we have the potential tariff announcement. The U.S. is meeting with Canada this week, and the tariff announcement for Canada is expected this week. So it's a huge week for Canada. And I'm neutral, the Canadian dollar, because we're going to have to be reactive and not proactive. We're going to have to see how things go. Also neutral New Zealand dollars. We don't have much in the way of Kiwi data. It's going to trade exclusively on US dollar flows. I'm also bearish Swiss francs. We had weaker Swiss PMIs this morning. And then bullish the Japanese yen, because the Bank of Japan is, you know, while the Federal Reserve is gearing up to cut interest rates, the Bank of Japan is still expected to raise interest rates once this year. So before we take a look at the charts, let's just run through the calendar real quick. So this week, it's a bank holiday in Australia and in Canada today. We had weaker Swiss PMIs. Inflation data was kind of flat. Nothing really going on for the U.S. today. We have factory orders at 10 a.m. That is not that market moving at all. We do have BOJ minutes tonight, which I think will show that the BOJ is getting closer to raising interest rates. Tomorrow, we have revisions to Eurozone PMIs, not a huge market mover. We have Canadian trade data. We have ISM services from the U.S. These are the two most important. Market is expecting ISM services to be stronger, but based upon the non-farm payrolls report, based upon the drop in manufacturing activity, the risk is to the downside for ISM services. We have New Zealand jobs report. So with New Zealand, we did have a drop in job ads. So chances are these numbers are going to be weaker as well. On Wednesday, we have German factory orders. Labor cash earnings is pretty important for Japan. If it rises from 1.4 to 3.2, we should have a more significant sell-off in dollar yen. And then on Wednesday, we have no major data from the U.S., a bunch of Fed speak. We have Chinese data, Chinese trade data, which is always interesting. Thursday, we have the Bank of England rate decision. So that's, always interesting to watch because rate decisions are very important. As I said, market is expecting 25 basis point rate cut from the Bank of England. Jobless claims also become more and more important. IV PMI being released from Canada, a big jump is expected. And we'll see whether or not that happens. And then lastly, on Friday, we have the Canadian jobs number, which is expected to pull back after a really big jump the month before. So pretty important week for Canada, for the British pound. That's all going to be front and center. Now, in terms of the charts, euro, as I said, I am bullish euros this week, bearish dollars. I think eventually you're going to see euro retest these highs here. I think it's going to happen. It's just a matter of time. And so I am bullish euro dollars this week. I'm bearish dollar yen this week. This is a very ugly candle for dollar yen. This is we have a huge sell-off candle. This is a reversal candle. I think there's a very good chance that we're going to go to 145.50 minimum in dollar yen, but more likely in this region here around 144.50. It's a huge week for dollar CAD, as I said. Right now, the data has not started yet. It's trading off of US dollar flows. Technically, it looks very weak. Technically, it looks like it wants to come down towards the 137 level. So very, very weak level for dollar CAD. Dollar Swiss is very much better because we have the weaker Swiss PMIs. So I think this could be a sell on rallies opportunity in dollar Swiss. Pound dollar, we talked a little bit about this. I'm bearish dollars, so it could rally a little bit, but be seller on rallies. Aussie, same story. We are bearish US dollars, we're bearish Aussies, so the better opportunity should be in the Aussie crosses, like maybe Aussie Swiss, for example. And then Kiwi dollar is going to trade off of US dollar flows, so probably a little bit more gains this week, probably moving up to this level, depending upon how those jobs report fares. So that's basically what I'm looking for this week. My favorite trades will be looking to sell dollar yen and to buy euro dollars, of course, barring any unexpected headlines. As for gold, gold is, gold trades off of the US dollar flows, and gold is priced in dollars. And so this gold is now above all of the major moving averages. This is a hammer candle, very bullish. And if we expect the dollar to continue to fall, perhaps one of the best trades is to buy gold. And so I like that quite a bit. I think gold looks very bullish right now. I think we're headed up to at least 3,400, if not even higher in gold. So now I'd like to open up the floor to any questions. Boris is unfortunately not able to join us today. He's on a trip to see his daughter's performance that she's worked very, very hard on all summer. So he'll be back with you for trading tomorrow, but I'm here for any questions. I don't trade silver at all, but we can look at it together on the charts. So silver, is probably going to move like the same way as gold. Silver is rallying. I think it's going to move higher, but beware of a potential forming of a head and shoulders. It's very early. We've got to roll over, but right now more bullish than bearish silver. So big question about August then markets. Should we even trade? Well, for BK members, we, here's our trading plan schedule. We're trading actually every single day. This week, outside of Sunday, Mondays, we don't trade Sunday, Mondays because they are not very fruitful for us. In terms of, the rest of, in terms of August in general, August, the first 2 weeks of August can be very, very good. The last 2 weeks of August can be more thinner, I guess, but I don't think it makes any difference. We stay vigilant to our zip signals, and I'm looking at our history of trading August. We've done, August has been a good month for us, regardless of the thinner summer flows. So I don't think it makes too much of a difference. Why is CAD still bullish after the tariffs? Well, data for Canada has been, pretty okay. And so the jobs report, remember, was a blowout jobs number. You got one country with weaker job growth, one country with stronger job growth. And then, of course, it is moving today on US dollar weakness. But yes, Mohammed, a breakout is a pullback is valid if it comes off a breakout and it's a retest of a breakout. I think we have to do a whole session on that. It's not something that we could talk about in just a few minutes. But otherwise, I thank you all for joining me. And as I said, this is a very, very busy trading week for non-US dollar flows, but I think it gives us clarity in dollar flows. And also, I encourage you to check out, either join our free community to get updated on everything that happens throughout the course of the week. If you want to learn more on how to trade fundamentals, here's a great offer that includes my fundamentals trading course. So use your QR code, click on those links, bookmark it, check out, what's is interesting and makes sense for you. Otherwise, I thank you all for joining me this morning, and I will see you all in the markets. So I have some other questions. Swiss CPI was better than expected this morning. Is it more important than PMIs? It is. Well, the thing is that CPI is important and PMI is important, but CPI was just flat and PMI was weak. So I think that it's, it mattered more. The PMIs, which is more forward-looking, mattered more than anything else. In terms of the COT data, I have some videos on YouTube that basically show how to use COT to trade. So definitely search that. I don't look at the Stablecoin Genius. The Stablecoin Genius Act is definitely, something that is on the radar, but not something that, I think is impacting the markets this week. All right. Thank you so much, everyone. Like I said, we're so close to, let's see where I am at right now. YouTube//BK4X. We are at 99,850, I believe, subscribers. So just so close to 100,000. So please hit subscribe, like if you aren't a subscriber already. And I will very proudly showcase my silver YouTube button when I get it. So I'm very excited about that. Otherwise, and share with your friends, get them to like and subscribe, help me get to that 100,000 mark. If we do, I'm going to do a very special strategy webinar, which I never do on YouTube. So if you tell your friends to like and subscribe to my channel, we'll get to 100,000. I'll schedule as a thank you a very special strategy webinar to thank all of you and showcase some interesting strategies. Otherwise, have a great trading week, and I will see you all in the markets.